Welcome and good evening, everybody. This is Tal Frank with PhysicianLoans, President of PhysicianLoans. Welcome to this evening's session. Looking forward to it. We have a lot of great information for you guys. We have many signed up, and I know I can see here people are still joining us online, but I do want to respect everybody's time and get started on time. I do want to thank our partner in this, the AMA, for collaborating with us on this, getting the word out. We've had many years of a good relationship with assisting AMA members with their mortgages. And obviously we are in unprecedented times right now. And with all the questions that have been brought up over the last several weeks by doctors, by the AMA members. We wanted to have an opportunity to have a live forum in which you guys can learn a little bit more about what's going on and get some more information and have your questions answered. So welcome. Little bit brief intro as to who we are. I like to start with this picture when I'm presenting to an audience. The photo on the right, that's me sitting down in front many years ago, and I'm sitting in front of one of my younger brothers, and that is his match day ceremony. And to our left are our parents. And the reason I start with this photo is it tells a little bit about who we are and how we got to this position. Our parents started a generic mortgage company back in the early 90s, and a few things all happened around the same time, just a few years after starting, and one of them was having a son and a brother in medical school, and we learned quickly that group needed a little extra hand-holding when it came to financial matters and needed some special financing. So we pioneered a special mortgage for doctors. Yes, we will be talking about that. We'll be answering your questions about that. And so it is a family business that started back in the early 90s, and we have a doctor in the family to thank for it that gave us the inspiration to take this generic company and retool it to specialize in working with doctors, so that today we're a preferred provider for many medical associations, and many of you probably have heard about us through either your med school or hospital residency program, things like that. So we've been at it for many years. We're a trusted source, and this is going to be an opportunity to learn. We put together a little bit of kind of a brief agenda where we're going to cover home buying during this COVID-19 pandemic. So this is not a session on financing. We do webinars on home financing, the ins and outs, the budgeting, the debt ratios, that calculating how much you qualify for, things like that. So this session is the one specifically about what's different now, what's changed, and how you need to modify things during this period. However, if you look at the last item there that's highlighted, this is a live session. There's Q&A throughout. So joining me is Danny behind the scenes. Let's see, you guys are already typing in questions, so let's see if he's paying attention to me. Danny, you able to say a quick hello to everybody?
No, I am. Thanks, Paul, and I appreciate it. And I will be answering questions in the background. So if you ask a question, it's not answered right away, please be patient, but I am going to get to all of them.
All right, very good. So Danny will be fielding all of your questions, and I want to point that out because I know some of you probably came on also wanting to ask some specific finance-related questions, and you are more than welcome to ask that. You can ask anything about anything, and if we have an answer for you, we will help you out. I can already see one of the questions that came in is the session being recorded? We are recording this session and hope to be able to make that available after tonight, some point. So let me start by hitting some of the main questions that I get and that we hear a lot from doctors who, if they're in the market to buy a home, certainly if you're a graduating med student or if you're wrapping up residency or fellowship, you're at that natural point where you're relocating and you either have to be looking at buying or renting. So one of the first questions that I get is this really a crisis as it was in 2008 when it comes to buying a home? And so I want to start by laying out the differences. Certainly this is, we're in the middle of a pandemic. It is a crisis for many. From a financing standpoint, so specifically when we're talking about the financing standpoint, 2008 was a mortgage crisis. And the whole financial collapse started in the mortgage industry. You did have many foreclosures, home values plummeted, and the reasons for that is because homes in the years leading up to that were purchased with very, very weak underwriting standards. I mean, the joke in the industry at that time was if you had a pulse, you can get a mortgage. And unfortunately, that was very close to being true. And what happened is banks weren't lending anymore. For a while, people could not get mortgages. And when they needed money, they couldn't get them out of their homes because people also had minimal equity in their homes. The situation right now is not a mortgage crisis. Obviously, there is an impact on mortgage and real estate. But what you are seeing right now, everyone's hearing about forbearances. I know that's in the news quite a lot. So the forbearance is very different than foreclosure. Foreclosure means a homeowner failed to make timely payments on their house and the bank was foreclosing on them, meaning basically taking their home away from them. Forbearance is what is happening right now where you've got homeowners who can't make payments, but lenders are letting it slide. Lenders are, I'll have another slide coming up on this, but it's not resulting in foreclosures. Also, most of the people in homes right now bought those homes under much more solid underwriting guidelines and standards. And even though we're going through the coronavirus pandemic right now, you've got banks that are lending. It is possible to get a mortgage, and many who have homes right now already have a substantial amount of equity in their homes. So from a financial standpoint, it's very different. It is a crisis, but not like the one we saw in 2008. And it's important to make that distinction because, as you'll see with some of the slides we cover down the line here, one of the other big things that I try to hit are answering your questions about, well, is it a good time to buy a home? And, are we going to see homes drop by 40, 50% in value? So we'll get to that. So I mentioned forbearance. And again, I have to bring it up because it's in all the headlines. So yes, we've got I see an extra dollar sign put in there by mistake. I apologize, but there are over 3 million homeowners who have applied for forbearance. And the bottom line from all that is that the expected impact on home values over the next 6 to 12 months is rather minimal. And again, that's because it's not resulting in foreclosures. You've got the lenders kind of making it, let's say, as painless as possible for letting them get by and not make payments, and trying to penalize as little as possible. Now, of course, there's an asterisk there because there are all kinds of cases where you applied, did you truly get approved? Will it impact your credit? There shouldn't be any fees or any impact on your credit report. So there are all kinds of issues we can discuss here, but the bottom line is homeowners who are currently having challenges are being given an opportunity to try and just tread water for the next several months and then hopefully get on their feet. And you've got the government actively stepping in with stimulus checks, with keeping mortgage rates low, and actively encouraging slash forcing lenders to go easy on homeowners. So for those of you, the reason I bring this up right now is because, again, it goes to that question of, should I buy a home right now? What can I expect with market values coming up? And the reality is, and I'm going to show you some more concrete statistics, but minimal impact is expected at least over the next 6 to 12 months. Let's, so for those of you that joined us late, welcome, welcome. This is a live session. You are able to type in questions. We have Danny behind the scenes who's fielding your questions. We will not turn off the session until all of your questions are answered. I've got over 20 plus years experience here. So again, the goal is to be able to help you guys out. And as I mentioned, this is not a financing session, but let's talk a little bit about mortgages, again, just to set the stage for some of the things we'll be discussing in a few slides. So there are basically 4 kinds of mortgages in the U.S. If you're talking about the standard kinds of products. And there is something called a physician loan. It is a special mortgage for doctors. That's the one that I mentioned we pioneered back in the 90s. And it's also what is known as a portfolio loan. So it does still exist. There is a myth out there that it no longer exists, or at least is not being offered right now. It does exist. There's also something called a conforming loan, which are loans that are underwritten, or they're done to the guidelines set by Fannie Mae and Freddie Mac. So those still exist in plenty. The banks are offering those loans. There are some modifications being made that I'll review in the next slide here. You still have FHA loans and VA loans. VA loans are Veterans Administration loans. So those are for eligible military. So all 4 loans that have been in effect for the last many years, they're still in play. They are still available. So you don't have a banking crisis or a lending crisis like you would have seen back in 2008. However, there are some changes. So there are changes to the underwriting, changes to the types of the loans or the structure. So a physician loan with 0 down does still exist. So we do offer it. We've not made any changes to it ourselves. We're still offering it with 0 down. So if you are looking for a mortgage at some point with 0 down, no PMI, you're welcome to go to our website, ask for a loan officer, and we'll be happy to help out. So we're doing it exists. However, if you're looking at the entire market and across the country, there are some changes out there. So there are some lenders who have temporarily suspended the program, and others that kept the program. However, they modified it from 0 down to 5 or 10% down. So that's something you might run into out there. Some lenders are requiring higher reserves. That means in order to qualify for a physician loan, you have to have more money in the bank than original guidelines pre-COVID-19. All these, by the way, are expected to be temporary. Also, there are additional underwriting steps with many lenders, ourselves included, that lengthen the timeline of getting to closing. And we'll go through the timeline so that you can budget properly for that. And in some cases, lenders require higher credit scores. Now, we've left ours in the same place, so we require a credit score of 700 and above for no money down. When it comes to the Fannie Mae Freddie Mac loans, this is other big news you may have seen out there. You've got banks such as Chase who said that they're temporarily changing the guidelines for what they accept, where if you're doing a conforming loan, they're requiring 20% down. Again, that's only expected to be temporary. Some, such as Wells Fargo, are putting a pause on home equity lines or second mortgages. So this is important for you to know as a potential home buyer. If you plan to buy a home and then get an equity line to do some home improvements or work, things like that, still available out there, but not in the same way. And some banks just are hitting the pause button on that. But again, big picture is lending is still happening out there. And so it's not necessarily a mortgage crisis, but there are some things that that will go through that will have an impact on you. So what about with the specific financing, what kind of impact does this have on doctors? So for the most part, if you are a medical school student or graduating med student, a resident, that includes fellows as well, or if you are a W-2 salary employee, let's say at a hospital, for the most part, no impact. The only impact is if you don't call the right place, you might be told 10% down instead of 0 down, but otherwise, pretty much no change for those three groups. What if you are a doctor? What if you're a physician that owns your practice? So it depends. The way most banks are looking at it right now with their temporary guidelines is that you can still qualify and qualify for the same amount that you would, as long as you've been able to maintain income of 75% or more on a monthly basis. So let's say pre-COVID-19, let's say you owned a practice, what a bank would look at is typically average out your last 12 or 24 months, and that was the income that's used. Right now, because many doctors and practices for all kinds of specialties and types have had to stop walk-in business or non-emergency business, you would have to show what your revenue has been since March and see if that is maintaining 75%. So it depends for that group. Now, what about those of you that are contract employees, self-employed, maybe not a practice owner, but still a self-employed? So the answer there is it depends. It depends on if you can show that you are still working or not, if there's been a material change in hours, well, let's say for the worse, as far as your hours, less hours. So those are looked at on a case-by-case basis. If you are self-employed and you are still working, you are still, let's say, 1099 and being given the same hours, same number of cases, same everything, then no impact on you. What about for the doctors that are currently unemployed or, let's say, just not working? So the answer there is yes. If you are looking to buy a home, but you are currently unemployed, while you are unemployed or while you are not receiving a regular income or paycheck, then unfortunately for right now, you would not be able to buy a home, even if you're expected to go back in the next 2 months and still be close to what you earned over the year, or let's say more than enough to qualify for a mortgage. So I give an example here of, let's say you're a doctor in Florida performing elective surgeries. Well, at some point, don't forget the exact date in March, elective surgeries in Florida were no longer permitted. And so those doctors were not working for a little while. I know that one very well because the kid, let's say in that photo that I started with, my younger brother, that's his case in Florida, where he has not been working for a little while as one who's doing elective procedures. But he's coming back online very shortly, and so they're now starting to ramp up a caseload. In his case, if he were looking to buy a home, he would have to wait just a little bit longer until he could show that they're back in full swing. So from a financing standpoint, that's what you can expect out there. And something that I present is this, call it a cheat sheet with the different mortgage loan types and different questions that you can ask a lender to see if they've had any changes in their guidelines and underwriting. So you can use this to help you with some questions to ask. This session is being recorded. You're welcome to screen capture, by the way, guys. Anything you'd like here, and we will make this available afterwards as well. So because, let me just take one quick break here, and again, welcome everyone who's joined us, who joined after the intro. This is a live session. You are able to type in questions. You guys are typing in a lot of questions. We've got Danny behind the scenes who's fielding them. Please be patient, but he will work through that list. And like I said, we will not be shutting down we'll not shut down the session until all of your questions are answered. For those of you raising your hands, no need to raise your hands. Just go ahead and type in the questions, and Danny will go ahead and field them. So again, because one of the main questions I get right now is it a good time to buy a home? Should I put it on hold for a while? Should I rent this year and maybe buy next year? So I created a few slides with some statistics for you that, the bottom line is if you're not comfortable buying right now for one of any number of reasons, that's fine. I never go into groups of medical students, residents, or doctors and say you have to buy a home, you should buy a home. I'll present the information, help you decide, but here are a few things. The National Association of Realtors, NAR, they conducted 3 coronavirus-specific surveys since early April. So what's interesting is in early April, about 45% of the agents reported that there was a 50% or more decline in buyer interest. By late April, that dropped to about 35%. So the trend, again, anything we discuss right now, this information is fast moving, just like in the medical information that we hear, at some point we might think we're in the clear this summer, and then medically the situation changes again. So, but as of April, at the start of April, there was a lot more fear and hesitation. That started easing up by late April. Overall, from what we see, about 30% of buyers, at least in April, were putting a purchase on hold. However, those sellers who are still keeping their homes on the market or putting their homes on the market, they held their prices pretty steady, and 75% of agents through National Association of Realtors stated that their sellers were not lowering their prices just because their home was for sale during the pandemic. Another interesting statistic or showing a trend here is the early April survey showed that about 17% of buyers were holding off on a search just because of their fear, specifically of direct person-to-person contact. And by late April, I guess people have a little bit more of a sense of what's going on, a little bit better understanding of how to protect themselves. That dropped to about 9% of buyers saying they're going to put things on hold, specifically due to direct person-on-person contact. So overall, NAR predicts, they predict home sales to be down 14% overall for the year. And the way they break that down is, definitely a drop for April, May, June, but then things should pick up strongly. Now, depending on what you read, I believe that's a low number. I've read material that said anywhere between 14 to 30% for the year. So bottom line is there will be a decline overall, but it's not a crash. And anywhere I read, I pretty much see that prices are expected to remain steady. And I'll go into a little bit more information on that as well, on how to segment that. So I randomly chose one specific market here, Grand Junction, Colorado. We happen to do a lot of business in Colorado. And I put this not because you need to know what the market's doing in Grand Junction, Colorado, but if you are in the market to buy a home or sell a home, looking at these kinds of statistics will help prompt you on what questions to discuss with the real estate agent, help you know if that real estate agent knows their stuff, and will help you decide if it's a good time to buy in that market. So what's interesting is if you look at April 2020 versus April 2019, number of unit sales were down by about 17%. That only accounted to about 4% of volume, just because you had some higher dollar amount of homes. But bottom line there again, a decrease in sales. Interestingly, there was not a change in the average days of market. It'll be interesting to see what the May numbers show, because May closings are homes that really maybe started showing in April. So we'll see how that looks. And active listings. So new listings or active listings, homes for sale, April of this year are down 12% versus April of last year. So less homes on the market. Again, a decline, not a crash. For those homes that are selling, they are selling at about 98.5% of the list price. So what that means is buyers are not getting a discount. You can't get a steal on a home right now just because there's a pandemic in place. It also means sellers have to price their homes properly, fairly, at a fair market value. Not a good time to try and get a lot more for your house. Some might think that's a good idea because inventory is low right now, but in general, let's say for that market, they're selling at 98% and change. So these are good statistics to ask your agent that you are working with or you will be working with on what's happening in that particular market. Now, something else that's very interesting to look at, which helps you zero in better on the price point of homes that you're looking at. So for Grand Junction, Colorado, homes up to the $500,000 purchase price, there's about 1 to 4 months of inventory. So standard healthy inventory in a marketplace is about 3 months or so. That means things are in balance. It's not necessarily a strong buyer's market, not necessarily a strong seller's market. But you see, once you go to homes in Grand Junction between 5 and 700,000, notice you've got about 7.5 months worth of inventory, meaning that you've got more inventory than buyers. So if you happen to be looking for a home in that price range, you are in a little bit more of a stronger negotiating position because there's more inventory than buyers for that price point right now. And then look at 700,000 to $1 million, just over 1 year of inventory. Now, those numbers can change from month to month depending on what's sold or what's taken off the market, what's put on the market. So again, it's constantly evolving, but these are good types of questions to know to ask a real estate agent, and especially for those of you that need to sell a home before or while you are also looking for another home as a seller. This is a good exercise for you to go through with your agent. So because, again, home values currently and what's expected over the next 6 to 12 months is very important, everybody wants to know about appreciation. What's happening with home appreciation, and will they expect to see some massive depreciation? Because nobody wants to buy a home in June, and over the next several months lose 20, 30, 40% equity because they bought heading into a crash. So I don't see that coming. I don't see any material I'm reading where saying that that is coming. But if you look at across the nation, for the week ending April 4th, homes were appreciated about 1.6% compared to same period before that. Notice with each week in April, homes still appreciated, but the amount of appreciation was less. Now, it will be interesting to see May numbers, if there is going to be depreciation as far as across the country, just some general average numbers. But for right now, they're about holding steady. So what's interesting is that, you know, the stock market had a plunge in response to the pandemic. You don't see that happening right now in the mortgage space. Mortgage applications have been down. Overall, mortgage applications are down in April, but by the end of April, for that week that was being counted, they increased 12%, so that they're still down, but I don't know if that's the bottom and it's turning around. Again, I'm sure any medical information that comes out and updates about how we're faring in this country with preventing the virus, that could change things. But at least it trended upwards a little bit by the end of April. And pending home sales also started to tick up a little bit, again, down overall. So what does this mean? That the price growth, the appreciation, the strong appreciation that we've been seeing in the country has slowed, and in some cases is now non-existent, but we've not yet seen any depreciation. There are certain pockets in some home prices. So like if you're in a certain market for homes over $1 million, those might come down a little bit. But again, that's going to be very localized information. So as I already mentioned, as a buyer, don't expect any deep discounts on properties, at least for those of you entering the market in the next several months. And sellers, do price your homes at a fair market value. You don't need to have a deep discount. Don't think though that just because there's low inventory, you can really increase your price and everybody will be throwing offers at your feet. So it is going to be very localized. And again, the home values for the higher end homes will see a greater decline, possibly a little bit of a drop in value, at least from the prior year. Doesn't mean that you're going to see a crash, but a drop in value. And also markets where affordability is already an issue. So think New York City, think Bay Area, San Francisco, LA. They're going to have a little bit more of an issue in the next 6 to 12 months with home values. And if you're buying into those markets, you might be able to get a little bit of a lower price with that. And to go along with that, and this just is logical, it makes sense, those markets that were hardest hit by COVID-19 are expected to see a little bit of a further decline in values over the coming months, even if they have not seen the decline yet. And part of that could be because there just hasn't been as much activity. As the market opens up and people do start to put their homes on the market and sell, there might be a decrease in value. But overall, on average, across the country, a mild effect on prices, with some pockets that will see some sort of a dip over the next 6 to 12 months. I'm going to take a quick peek here at, yeah, you guys are still keeping Danny busy with questions, so very good. Keep those questions coming, type them in, no need to raise your hands, and Danny's fielding them, whether they have to do with financing specifically, the market, COVID-19 related, things like that. So there's a website that I like to use as a reference, FHFA.gov. And this is from the latest report. So what's interesting is February of 2020, home prices were up almost 6% compared to February of 2019. And in February, just the month of February 20, the average increase was 0.7% in value. Now, that's the reports. The March numbers are not out yet. It'll be interesting to see what those show. Keep in mind, it wasn't really till the second half of March that things really started to shut down. But they have very good tables and statistics on what the country is doing. They then divide by region and state, and then you can even look up the city where you plan to buy or sell and see what's happening. Now, right now, everything does look rosy. Everything looks fine because the latest numbers, don't really take into effect yet. But I'm showing you this so that you know where to look. Let's say if you're not buying for another several months, at least this is going to be a good reference for you. So I do want to bring up something to just help you guys out and protect you. On my agenda at the start, I said I have two goals. One is to teach you guys as much as possible and field your questions, and the other is to protect you. And so there is something that this was in place even before March and before COVID-19 hit, but something that rather than a physician loan, it's what I call a physician loan. And here's an example. It's a lender that sent me, they wanted me to recommend them in a market where we don't operate ourselves. So they sent me an email. I've attached the guidelines for our doctor loan program, and it's a Freddie, they wrote, this is a Freddie Mac loan and requires mortgage insurance. So I bring that up because you need to be on extra high alert right now that a true physician loan does exist. You can get zero down. I mentioned we offer that. There are others that do as well, still at zero down, but there are several that now require down payment. They're still true physician loans, just that they require 5 or 10% down. But the reason I bring something like this up is because here's another example. It's a flyer that came across my desk. This is a regional bank. If I mention the name, many of you would probably recognize it. When I give these kinds of talks, I don't really talk about specific bank names when I have negative things to say. But if you look at their flyer, their third item down, they call it their doctor loan. And I realize the print here is a little too small for you to read. So if we blow that up, here's their information on their flyer for their doctor loan. And notice, this was even pre-COVID-19. They call it a doctor loan, but it has mortgage insurance, which a true doctor loan should not have. By the way, even pre-COVID-19, they were, if you look at that first bullet point, 95% loan to value, 95% financing, meaning 5% down. So they were never doing zero down. And for those of you that are graduating med students or residents, notice when it comes to the student loans, something that's a no-no with a true physician loan is that they require you to show proof that your student loans are deferred for greater than 12 months in order to not count it in the debt ratio. And that is the exact opposite of what a true physician loan does for the new doctors, the graduating med students and residents. So these are the kinds of things to watch out for and make sure that you ask the right questions. I will say if you go to our website and you request a loan officer, it will be a loan officer who is offering a true physician loan. So let's talk a little bit about the timeline. What's changed about the timeline? What are some of the new steps? So To start the process, there's no difference. You're still going to reach out to both a loan officer. Tell you what, let me just bring up the next two. You're going to reach out to a loan officer as well as a real estate agent. So these two people are going to be your trusted two-person tag team, dream team that will walk you through this process. When do you reach out to a loan officer? Ideally, anywhere up to 3, 4, you can go 5 months even before you're ready to buy a home. But most people will do anywhere from 1 to 3 months before they're ready to start looking for a home. They'll reach out to a loan officer so that they can get pre-qualified. There is no change to this process. Even before COVID-19, all of this could be done remotely by phone, fax, email, things like ShareFile, DocuSign. So you can do this from home. You don't have to go in and meet with anybody face-to-face. So this part of the process is not impacted, and the timeline is not impacted. The real estate agent, so the loan officer, can be located anywhere in the U.S. as long as they're licensed to do business in the state where you are buying. And again, you do that remotely. The real estate agent is based in the city, in the market where you are buying. You can start this process, though, again, with proper distancing. You don't have to go in and meet them yet. You can get to know them over the phone. You'll have plenty of emails and texts going back and forth, and they can start feeding you information about the marketplace. I get asked a lot how to find a good real estate agent. This is one way to do it. You can go to drsagent.com. So this is a network of agents across the country who specialize in working with the medical community, especially the incoming doctors to a community. They'll work with a lot of residents as well. So this is also a preferred provider for the AMA and other medical associations. These are also agents that understand buying during COVID-19. So up to this point, your timeline hasn't changed. You can find a loan officer and a real estate agent all online. You put in a request now that by the end of the day tomorrow, you're matched up. So within 24 hours, you've got somebody. You did this from your house, and you can get pre-qualified still, usually same day as well. So no change there. So where things change is now when you start to look for a home so that you can get under contract. It used to be you would hop into a car with a real estate agent. You'd spend a day, day and a half driving around town, going into anywhere from 12 to 25 different properties, maybe then going back and visiting some of the other ones that you liked and looking and narrowing down your list that way. And then maybe before you leave town, making an offer on a place, and the rest would be completed from home. Now, if you go somewhere, typically you're going to not get into the car with the real estate agent. You would follow them, but even before you get to that point, they will provide you with videos of virtual tours of any of the properties that you want to look at. So they'll set you up on a portal where you can look at all the properties, see all the listings, see plenty of photos, things like that. You'll get a virtual tour, either a virtual tour that it was already prepared for this, or the agent will arrange to go into that property and walk through while they're live, pick the app of choice, WhatsApp, Facebook, anything like that to show you through. And then you'll narrow it down to maybe 3 homes that you actually want to go in and look at yourself. And then the process for looking at a home has also changed, where there are some differences from city to city or state to state, but it's not uncommon that you'll walk into a place, the sellers are not allowed to be there. they have to leave all the lights on, all the doors open, so that there is little to touch as possible. You can just walk through, not touch anything, and walk out. And then the agent will just simply close the door behind them. So that's going to be a lot of the new process. On one hand, it's actually quicker to look at the places, but you might be spending more time kind of doing the pre-planning on that. Once you get under contract until closing, standard timeline is usually to close within about 30 days. So what that means is if you find a home, you negotiate back and forth with the sellers. Once there's an agreement, you could close within 30 days. In today's market, that can be about 45 days or so. Again, depending on the city and state. And the reason for that is because there are many steps of the process that have slowed down. So appraisers are slower right now. They are being a little bit more cautious. They are going through properties in a little bit of a different way. However, on the flip side, with a conforming loan, if you are a buyer with strong enough credit, strong enough down payment, things like that, then you can get what's called an appraisal waiver. So appraisal is not even necessary. But that's not on a physician loan. Those are on conforming loans where you're putting typically 20% plus down. Inspections are a little bit slower as well. Title companies, keep in mind, a lot of these places might still have a lot of employees working remotely, so they're still working, but things might be a little bit slower to get done. So the reason I bring this up with the timeline is because if you're trying to, let's say you want to move into a place by the end of August, and it's probably safe to assume that you should still budget about 45 days. It means that you'd want to be under contract by mid-July at the latest, ideally even early July. So that means June is when you'd want to start your pre-planning, looking at places virtually and then in person as well. When I say it's normally was 30 days, so it's 30 days, and in some cases that could be rushed and even quicker, but you can't really plan for a rush right now. When it comes to the closing itself, there are many changes there. You have either remote closings, online closings. Now, it's still tricky because if it's what's called a remote closing, you still have to get in front of a notary to notarize the signature. There's also something called a curbside closing, where you pull up in your car to the title company or closing attorney's office. It's kind of funny, but somebody will come out with a brand new pad and the thick stack of papers that you have to sign. They'll give you a new pen, hand it to you through the window. You hold up your ID to the window. They take a picture of it so that they're verifying your ID. I guess you have to take your masks off for that. And you'll sign everything in the car. They will then take it into the building, have the notary inside the building notarize everything, because the person who's there in front of you, they can vouch that it was you who signed it. And then they will either come back with a set of signed documents or they'll scan them to you as well. But that's one way we see for closings taking place. So really one of the main challenges right now when it comes to this process is it's just really the logistics of, if you're buying in a different city and you've got to travel there, is it a road trip or a flight? Because if it's a flight, obviously, you may not have the same schedules available as you did prior. There are some cities that had very, very strict, some states, in fact, Pennsylvania, it's been lifted, but at one point they weren't even allowing home showings. I think it lasted for a period of about a couple of weeks or so, but that's been lifted. So you would, of course, talk to your real estate agent, and they would let you know what the current restrictions are and how to go about it. But if you are able and willing to still get out and look at properties, then it is still possible. It will be a little bit more cumbersome process. It will take more time. And just keep in mind, there are less homes on the market right now. So maybe not as much to choose from, but it's, prices are still fair market values. And from that standpoint, you should be okay. Rates are low, and they're continued to stay low for the next several months, at least through the end of the year, is what's expected, because the government will, has a direct hand in trying to make sure that rates are affordable. So I've got one final section here before we hit the top of the hour. As I mentioned, we'll still stay on to continue fielding any additional questions you have. We'll make sure that we answer any of the questions that you've typed in. But when it comes to getting a place, there's the buy versus rent question. And I've been doing workshops, home buying workshops and talks for about 17, 18 years. And this is not a new question, buy versus rent. So there are a few new things to keep in mind right now as you're trying to do that analysis. But, it's the match city is the #1 factor. And part of it has to do just with availability of homes on the market, your ability to get around and navigate and go look at homes. Obviously, renting a place, if you're going to get into a one-year rental or some temporary situation, I guess for that, maybe you don't even need to go look at the place. I do know a lot of people can do that online. You get a good enough feel for a complex based on online and maybe other recommendations from other doctors, colleagues in that area. So the match city is key for the ease of buy and rent. There's the lifestyle, which doesn't change as part of the factor right now. This is a slide that I use on financing, typically, to when you have to decide in buy versus rent. The lifestyle choice of being a renter versus an owner, same pros and cons right now. The time in home. So this is a big one right now, because for those that are concerned about where market values are going to go, I'll share with you some of what I'm reading in the industry journals and just my opinion as well. So the general rule is the longer you're in a property, the more sense it makes to buy versus rent, and the more protected you'll be as far as any losses. So if you're going to be in a place for 4 or 5 years, then good likelihood that you, let's say, you'll come out ahead. And if things take a turn for the worse at that point, when you're looking to sell, you can write it out. You might rent the place. But the real concern is, let's say, over the next 6 to 12 months, does it matter? So even if there is a dip in property values over the next 6 to 12 months, if you're going to be in the property for 3, 4, 5 years at least anyway, the thought is that because this is not a mortgage crisis, because we're not expecting to have these mass foreclosures, that in the markets where you do see a dip, then by the end of this 6 to 12 month period, then things should be rebounding, start to increase, let's say, go back to normal. Looking at that FHFA.gov website, this is an interesting graph from there. So you can see they track home values across the U.S. This goes back to January of '91 through the most recent data that is posted, which is through the end of February. And clearly, if the device you're using is too small to see the dates at the bottom, you can still look at the graph and see where 2008 hit. And you can see the recovery since then. It took a few years, but things recovered. So I am curious to see where this graph is going to go over the next several months. Not sure. It certainly will not maintain the same solid upward trend that is expected to, the curve is going to flatten out here. This upward trend in appreciation will slow down. The question is, in some markets, will we see a depreciation that's being reported over any of the coming months? So we're not sure. Expected to be pretty mild, if any, of a dip. However, if you're looking at a 3 to 4 or 5 year or more period, again, we're not expecting a market drop to impact your value right now that will have an effect, let's say, when you're looking to sell then 4 or 5 years down the road. What if you rent? For those of you who want to rent for a year, that's fine too. I don't think you're going to miss out on anything. I think at least for the next 6 months or so, you'll probably see things holding steady. So if you want to do a shorter term lease and then reevaluate so that you can buy before things recover and values start ticking back up, that's fine. Because keep in mind, though, if you rent, whether it's 6-month lease or 1-year lease, usually every time you renew, especially the way the market's been going, market value or home values have been going up, but so have rental rates as well. Unfortunately, to the cost or price of housing in the U.S., whether a buyer or a renter, they've both gone up, making it difficult for certain price points and certain wage earners, but that's just the reality of where that's been. Again, I keep saying bottom line as it relates to this is if you're looking to stay at a place for the next several years, you should be okay. I don't try to time the market. If now's the right time for you to buy, then go for it. One of the stats I didn't put up here as I'm getting this other slide ready is that one of the primary concerns of those putting their purchases on hold right now is, they had a concern for their employment. And the good news with doctors is that you really don't have a concern there. Yes, there are many doctors whose income might be on hold right now, but that's temporary, and we'll soon, that'll be opening up again. And for the doctor whose income is on hold, who truly needs money, usually there is some sort of locum work or somewhere. Of course, I'm not saying it's convenient, but somewhere in the country there's the need for a doctor and plenty of agencies to help with work. And that's also why that's one of the strengths of a physician loan. The reason we were able to create that product and really bring it to market is because statistically, the doctor with good credit isn't going to default because of the solid earning power. So one thing to look at when you're considering the buy versus rent, when you rent a place, this is also a slide that I use in the actual talk on financing, but if you look at, and this is one that I do for graduating med students, so that's, we've got to call it an entry-level home of $237,000, which is the median home price in the U.S. You've got rent payments, and this is a simplified example where I'm not doing any increase in rent for a renewal, let's say, from year to year. But one thing to keep in mind if you're going to be buying a place is if there is some depreciation at some point, you can factor that into your equation. you're still going to be building equity every month when you make a mortgage payment. Part of your payment, your principal and interest, is going to pay off principal balance. So every year you pay off some of that balance, and then when you go to sell your home, in essence, you're getting that money back. So in my example here, you bought a home for $237,000. After 4 years, you pay off $17,000 in equity. So if you sell that home for not a penny more, 4 years later, you're still getting back $17,000 of that $69,900 that you paid over that 4-year period. When it comes to appreciation, I put in this figure or in this chart a very conservative 2% appreciation. If you caught it on those prior slides that I used from FHFA, the average annual appreciation in the U.S. has been around 5-6%. That is slowing down right now. That's expected to continue to slow down and level out over the next several months. So even if it only appreciates, 2% a year, you should still come out ahead down the line. In this example, it's a savings of about $25,000. Now, and we're not getting into all the details here. That's not the end of the calculation, because if you own, you still obviously have to pay for any maintenance, repairs, and the big ticket item is the cost of the real estate agent when you sell the place, which is typically 6% commission, and it's split between the two agents. So most of you aren't going to go through this in-depth of an analysis, but at least it helps give you a framework for how you walk through that decision. So we are at the top of the hour. That is the formal end of the presentation. I do have a resources page here that I'll leave up for a second. You guys are welcome to screen capture it. It will also be included in the recording as well. And then for those of you that do want to reach out to a loan officer, talk to a loan officer who offers a true physician loan, you can go to our website, PhysicianLoans.com, and put in your contact information and request for a loan officer to reach out to you. For those of you that have any follow-up questions down the line, or if you think of anything, I try to make myself available. You're welcome to email me, talfrank@physicianloans.com. It's on your screen there. So I don't act as a loan officer, but if you want to talk to me first and just bounce anything off me, always welcome to help out, try to help. You can let them know we've got these webinars as well on financing specifically. Have a great rest of the evening, everybody. Stay safe. And for those of you that have been out there on the front lines, really thank you for everything you do. And again, we know, we know a little bit about what you guys are going through, and really appreciate it. Have a good night, everybody.